Yo, what's going on, everyone? It's Chase. So today we are going to talk about Bitcoin. We're going to talk about Ethereum. The title of this video is this a bull market? And on the contrary, in my opinion, this is still mostly just a bear market rally. I'm going to show you guys why I believe so. As usual, we're going to start on the high time frames. We're here on the weekly time frame. And we can just fib this out, right? This current leg that we're in. And the thing is, too, is that if this is, even if we're talking bear market rally or, people are talking bull market, what's surprising me is that I'm starting to see some people taking profit. If you're so bullish, even in a bear market rally, we should be moving into at least above the equilibrium, the 0.5 here, or we should be moving into the 618. Okay, let's just mark out this level properly. 881.56, 881.56. So even if this is a bear market rally, we shouldn't be looking to really sell until above the equilibrium, until the 618. And if you're claiming that this is a bull market, well, then we should be blasting through the 618. My personal opinion is that we will see a strong rejection somewhere between the equilibrium and the 618. This is obviously a wide area here to work with. We can start taking lines and start drawing more. We have good weekly confluence here. If we move up to the monthly, it's tough to say where this is going to end up, right? You could also mark out these monthly closes and see support here, and then a big breakdown through. If I had to make a call here, I think I tend to lean closer to the 618. I think the 618 is, here's the thing, right? When looking at the market and looking at big time frame moves and potential swing plays, you sort of want to know where the rest of the market is looking. And if we're just digging up a level and saying, because some people are going to say, okay, use these monthly closes. Some people are going to say, use this wick. Some people are going to say, use these closes. Excuse me if I sneeze at all or sound weird. My allergies are killing me. So people are going to take different levels, right? I mean, people are going to take levels from over here, which I don't even think are relevant anymore, to be honest. I prefer to use recent price action, and the most recent price action is typically best, in my opinion. So, with all that said, what is something that we can say is always going to be the same for everyone? That's this 618 right here. So between the top of the fib here and between the low of the fib here, the equilibrium, the 618, these numbers are the same for everybody. I would most likely be probably front running the 618 to some degree right around here. I like the confluence here on the weekly. I like the 618 here. Somewhere between, I would have to say in here, somewhere between 2300 and 2500 is where I see this run topping out. And that is normal for a bear market rally. So again, I think, I see a lot of bullishness on the timeline, but I also see a lot of people, taking profit and whatnot, which is great, of course. All I'm saying is that if you're calling for a new bull market and you're already taking profit, that doesn't really make sense to me. But as a trader, I fully respect you taking profit. I just don't like that you're saying, oh, this is 100% a new bull market, but then why are you taking profit? Because we're not even in take profit bear market rally territory yet. Doesn't make any sense. Okay, sip of water. So that's all good and dandy, but how do we trade it? All right, so moving in, I would like, let's start a little lower and we'll work our way. Okay, so breakout off the bottom here. We have a low, sweep the low right there. Okay, liquidity sweep. Another leg, liquidity sweep. Now we're seeing another leg here. What I would like to see within this leg, and we'll add some confluence from over here, okay? So this resistance right here, this resistance, when we break through this resistance, most likely flips to support. And how do we add this liquidity play into it? Well, what I think we do is we range in here for a bit, okay? And you're gonna put a wick in, right? So let's pretend this candle right here, this is the wick low. So this right here is like this candle right here, okay? And then we range a little bit more, and then we wick in. That's the long entry, and you play it up towards the equilibrium and right up into here. Okay, that's your easiest exit. I haven't necessarily talked about this a lot, but but you guys have seen it in my technical analysis, how I analyze price action and whatnot. I'm often looking for the easy exit. I'm not necessarily a person to look for the whole entire swing. I understand some people are looking for that, and if you want to attempt to hold for the entire swing, you can look to hold towards the 618, towards, more of this resistance here. But what I can say is that I think when you're getting above the equilibrium, you're getting into territory where a big seller may look to make his move and distribute and whatnot. So I can't say if it simply gets to the EQ, if it gets a bit above the EQ, if it gets all the way to the 618. That's sort of up to the market and where sellers want to step in. But I do think this is a good play. Just look at how this goes, and obviously if you were being completely confluent, you would put that like that, right? But this was a somewhat of a fundamental event. I forget exactly what it was, but this was a big, I remember this day. It's like a big fundamental day. But nonetheless, it's still a sweep, right? So sweep, but typically without this big fundamental day or whatever happened here, and you could say that it was going to happen no matter what. I am a believer in that sometimes as well. It's just, this is a bit of a push here. Nonetheless, this was more of a Bitcoin move, if I remember right. Let me just check this on Bitcoin real quick. Yeah, the reason why was because we never swept this on Bitcoin, and if you've been watching my videos for a while, I was saying we need to sweep this level. I was looking at the daily. I was talking about Bitcoin. I was saying sweep this and we go up. And I was waiting for it, and I was waiting for it, and I was waiting for it all throughout here. I was waiting for this sweep, and it finally came. So this was more, I think, to sweep the liquidity on Bitcoin. Either way. So I think this is your long play, right? Like I said, you look for that liquidity, the liquidity buildup during the consolidation. You sweep into the prior SR. And again, look at this. You sweep into the prior SR. So resistance flips to support. Resistance, liquidity low, sweep into support, and move up to finish out this this bear market rally. Okay, so that's how I'm viewing ETH for now. And hold on. Thinking about, let's finish off ETH and talk about a potential short scenario. What I would say is that, let's just delete some of this. What I would say is that there's two scenarios here, right? Just moving on to the daily, you don't really want to see this completely reclaimed. So if this happens to come back down here, not too much interested in longs at the moment. I wouldn't want to see everyone who took place in this breakout be put underwater. I'm okay with a 50% retracement. Like I said, maybe you put in that little low, you chop a little bit. There's your 618 tap of like this leg right here. You could draw that out, and then we move off of that, something of that nature. Okay, that's fine with me for the long. But if we do break back below here, I'd have to sit and watch and see what type of price action developed in here. Maybe you see a short somewhere off of there and move downwards. Okay, outside of that, the more, very much more swing short is from around your 618 level. Somewhere within, like I said, obviously it's a big box, but somewhere within the equilibrium to the 618. Local price action is definitely going to be our friend here. Seeing local price action, looking for signs of distribution, looking for a potential blow off top. These are all things we'll talk about in future weeks as price action continues to develop. But if you just wanted to have a very base case and just say, hey, look, I don't spend much time on the charts. Where am I looking to sell this? I think around the 618, you gotta, you most likely have to get some type of rejection around here. I would be very surprised if price just plowed right through it. I can't see it. I feel like we move up into the 618, and that's where you finally get one of those strong rejections. And we continue to range for a bit. I can't really say from there. I don't look too far into the future. You guys know how I operate. All right. Anything else for ETH? Yeah, I think that's good. We'll come back and we'll compare back and forth to BTC. Before I move on, just real quick, big shout out to the sponsors of this video, Prime XBT, also Bybit. I have links in the description below. If you appreciate my content, if you understand this stuff, that's the best way to support me. Very helpful. If you're using your if you're using, like I've always said, if you're using your ref on LARPs and stuff and people who don't give you anything actionable, use it on someone who actually helps you. Throw it, like I said, there's a lot of good traders out there, people putting out ideas ahead of time rather than teaching you hindsight and whatnot. So give it to someone who actually is trying to help you out there. All right, moving forward, over to Bitcoin, and let's go on to the weekly in Bitcoin, and we'll look at this as well. So we're going to use the same concept here. Look at this chart real quick. Tell me where I'm going to start the fib. You're going to see it pretty quickly. If you had marked out here, you're correct. The current down leg. And look, pretty much the same scenario. We're not above the equilibrium yet, and we're not even at the 618 yet. And what do you see? You also see weekly confluence right around here, okay? It doesn't need to be perfect. Like I said, it could be anywhere around here. But what matters is that you're seeing confluence between the price action and between the fib here. And I think that's a pretty good sign that there's going to be multiple signals or multiple sell signals all around a single level, and that may mean that it gets front run a little bit, but either way, if people are looking to sell, I think you look to sell in here, and I think if it gets plowed through, that means that a lot of sellers are now either underwater or are completely off sides. If you plow through it, you probably look for a retest to move higher. I'm not going to draw it yet because I don't think it's necessary, but also think about that as well. You need to be thinking when buyers are getting rolled over, when are sellers getting rolled over, and where people are looking to operate. Okay, so how does Bitcoin get up into, let's say, 35K? Now, you're probably thinking, a sweep it down here, but I'm not sure about that just yet, right? Like 25,250, I think if you get down to here, ETH is going lower than this box, right? So if we're thinking consolidation and a move into here, if that's what we're thinking to move up, then on Bitcoin, I think what we're thinking is consolidation, a move into, sort of this demand area right here. You can see a lot of resistance, flips to support right here around 28K, 28.4-ish, and that's where you find your bounce. Move up into this liquidity level right there. That's your easiest target for the most part, or the top of this range, either or if you go down to lower time frames, either there or into the 618, again, where this resistance lies. Okay, and again, it's the same scenario on Bitcoin where, a swing short off the 618 should make sense. Now, talking about getting into actual swing shorts and, not LARPing and, just saying that, oh yeah, I'm short 35, I'm short 35.5, I'm short 36, I'm short 37, I'm short 38. That doesn't do you any good. What you need to think about here, especially someone if you're utilizing larger position size, or you want to try to spread your position out, okay? You shouldn't be putting your, you shouldn't be putting 25% of your net on something just because it's a big swing move. What you should be doing is you should be taking your typical risk, maybe going up by 1.5 times or so. So going, like 1.5 your typical risk, 2x at most. I think the most I ever risked up was 3 or 4 times my typical amount, and that was for the COVID drop. Just because I felt like it was a bit more of a fundamental trade, to be honest. I just had so much confidence in the fundamentals at that point that I think I sized up like 3.5 times or something in the nature. But typically, I'm only ever sizing up 1.5 to 2 times if really necessary. So what you should be doing is you should be saying, okay, if I'm shorting a little here, shorting a little here, shorting here, shorting here, shorting here, that's all fine, right? As long as this isn't 1 times, 2 times, 3 times, 4 times, 5 times position size. At most, this should just be 2 times position size, split up in between this area, and then have your stop is into here or something, and you're playing it to 25.2. Maybe stop can even be lower here if we're trying to get some good risk reward in here. That would be, you'd get about a 2.5 risk reward in there most likely, and that would be a potential way to play like a swing short scenario. Okay, you won't always get a complete fill, and that's part of the game. I think a lot of people are trying to find ways to always be perfect in these markets, and it doesn't exist. There's going to be days where the trades are not, where there's no trades to be had. There's going to be days where you're taking profit, but you're not finding a short. You're like taking a long profit, but you're not finding short. There's going to be days where you're shorting, but you're not longing when you take that profit. Okay, so things are going to the market is not, even though the market's always open for business, it's not always friendly. Let's just put it that way. And you got to pick and choose your moments, and also you need to understand how you should be executing within those moments, because there's different executions for different scenarios, whether it's high time frame, low time frame. I'm really trying to break this stuff down more for you guys. Okay, low time frame setup. So you have a resistance level, low time frame setup. Price just pushes right through and closes. It's probably time to get out. Your level just didn't work. The scalp is no good. You just didn't see a response. What you should see on a low time frame scalp is you should see a rejection from resistance, maybe a second sweep. Okay, that's it. That's all you really want to see. But when you're talking high time frame, you might get a close above. You might get 2 closes above, and then you come back down, you close back below. Because high time frame levels can get chopped up a bit, because what they want is they want people to get forced out of those positions. And since it's a big level, big players look to interact around big levels. Okay, so have your execution prepared for scalps versus swings, the risk amounts, all the things of those natures, okay, or all the stuff of that nature. Hopefully that's a decent explanation of it. So we covered Bitcoin, potential short, potential long, ETH, potential long, potential short. I know this is more of a swing trade video, but that was sort of what I expected. We've done plenty of low time frame stuff lately. You guys know the techniques. Go to my link tree, look up the entry techniques video, how to enter a trade 101. All that stuff is there. It's going to help you out on low time frame. Outside of that, moving over to ES or SPX, sort of the same thing. Right now, your bear market rally up into the equilibrium. 618 could be possible. A lot of tests of this level right here, a lot of tests of the equilibrium. Wouldn't be surprised if we come up and take liquidity. I haven't been focusing on ES as much lately because, when crypto is active, it does provide great opportunities. So I talked about that too recently on Twitter, is, going where the action is. And, this is a nice clean trend we're seeing here versus ES has been a bit more choppy. Don't get me wrong, there's been good trades in here. I've been taking some intraday trades as I usually do. But, overall, past 2 months or so, caught a good piece of these moves. Caught some good SR flips, caught some breaks. You guys remember when I was talking about, down here when we saw this sweep, and pretty sure I caught like most of this breakout leg, a little bit more in here, had a little scalp in here towards 1960. Again, that's talking about taking the easiest exit, right? So I was just thinking liquidity here. I wasn't necessarily thinking huge expansion, and I don't think there's a problem with that. I think a lot of the times if you're holding for massive expansion, you're going to be getting round tripped, and there's not an easy way to determine if massive expansion is coming or what the situation is for those specific trades. So I'll personally continue to take profit at my liquidity levels, my support and resistance levels, and every now and then when you do get a major move, you might not catch the entire thing, but if you did catch a piece of this, you should be proud of yourself, because catching a piece is better than most. Most people are either sidelined or they're closing their long and then they're opening short, which is a mistake during an uptrend, or they're simply just shorting, which is obviously a mistake during an uptrend. So if you had your bias correct, long uptrend, and you took profit somewhere, do not be feel happy about that. Be proud of that decision. Okay. Hopefully this was all helpful. As always, like I said, shout out to the sponsors of the video. Sign up with my links at the bottom in the YouTube description. Very much appreciate you guys, and I hope you have a great week. We'll talk soon. All right, peace out.